Hi, it's Stacy from Stacy Sells Philly. I hope everyone is having a fabulous, fabulous, fabulous day. So, summer, can you believe the summer is like almost half over or more than that? It's just amazing. I can't believe it. So, I wanted to come on tonight and talk to you guys about a couple of things. Here's my information. You know how to reach me. And you can call me. That's my cell phone number. Call it, share it, give it to someone you know who needs help with buying a home, who needs help selling a home. I am here for you. Okay. We're going to talk about mortgages today. I know this is something I've talked about in the past, but it is so critical that we all understand and have the correct information about mortgages. We're going to debunk a couple of myths here, like you don't need 20% down to buy a home. You don't need to have an 850 credit score in order to qualify for a mortgage. We're going to be talking about those things. And so I have a special guest for you guys tonight. I have two guests tonight. Double trouble. I have Delisha Ng. She's going to kill me if I said her name wrong. Oh my gosh. I'll bring her on. She is my go-to referral agent in Delaware and Northern Maryland. And so if you need help there, she and I both work for Berkshire Hathaway, and she is excellent. Excellent, excellent, excellent. So we're going to talk about mortgages, and this is why it's so important. I'm always going to come back to this topic because I want to dispel the myths. I want to have someone on who can tell you the truth so that you know how to move forward when you are looking to buy a home, okay? We're going to talk about the basics. I always talk about the three basics of buying a home and being approved for a mortgage. Julie is going to help us understand some of those basics. And one of the things that's so important to understand is where you are with your debt, guys. Let me just roll my eyes. We have got to get this debt thing under control. Get it under control and understand how it affects your buying power. So she's going to talk a little bit about debt to income ratio. But the most important thing that I brought Julie on and Ms. Ng on tonight is this. We need to talk about these new calculations that have gone into effect that allow folks who have student loan debt to now, more of them, qualify for a mortgage. Okay? Because there's a new calculation. I'll let her talk about that. And hopefully she can give us some more information. She is a broker, and she's going to help us understand some of these products. And I want you all to understand, even if you have a home right now and you're living in it, she can also help you with a refinance. Okay, so if you want to take advantage of these low rates, these low interest rates, please call her. We're going to get her on. We're going to get Delisha on so she can tell me I said her name incorrect.
Oh, that's so funny.
I love you, but I cannot.
I know. I love you too, Stacy.
Can I butcher anyone's name as much as I butcher your name? It's just horrible. Tell everybody your name. Tell everybody where you're from. And then we're going to put your information up on the bottom so they can see it.
All right. So my name is Delisha.
Delisha.
And Inge is the last name, like hinge or binge, you binge watch Inge. And I am licensed here in Delaware as well as Maryland. So I do service Cecil County, Maryland, as well as all of Delaware.
Right. So if anyone is interested, mostly Delaware. So if anyone is interested, I'm not going to even say her name again.
Delisha.
Horrible. As long as I'm knowing I can't do it. Delisha. You want to get in touch with Delisha, you let me know, okay? So that I can hook you up with our #1 Delaware and Cecil County, Maryland referring agent. Yes. So let me ask you a question. You and I both deal with first-time home buyers. We both deal with people who need assistance, both deal with people who have debt to income issues. Let's talk about this new change. What did you think when you saw it?
I was ecstatic. I was really excited about the opportunity that it's going to provide for so many people. Because I know several people who have not been able to qualify because of their student loans.
Right.
Which I think is not fair in the first place. But then the second thing I thought is, here comes tons of more qualified people, which means more buyers, which, of course, we're having some issues with getting some of our buyers in houses now just because of the low inventory.
Mm-hmm.
But still, just to at least have the opportunity to even be pre-qualified and have the opportunity to compete in this market, I think is a wonderful thing and is great for all of our buyers who decided to, go to school and
right, exactly.
To do it. I mean, they deserve to live the dream as well. Well, we deserve to live the dream as well.
Right. There you go. We need to have more people buy homes. I wanted to see more people
absolutely
in homes. I have room for another 20 this year, first-time home buyers. So if you're interested in buying your first home, $200,000 or under, give me a call. I have room for 20 more of those folks in my book. I don't know about you, Delicia. How about you? You're open?
Yeah, I'm open. First-time home buyers are my favorite because I love the education part of it. I love to, those who come and they don't know a single thing about it, and to be able to educate them and then give them keys in 3 or 4 months is the ultimate feeling for me. So I welcome them all.
Okay. So I have referred quite a few people to you, and I just love seeing you and talking to you. So you're going to stick around, right? And listen to what Julie has to say?
Absolutely.
All right. I'm going to take you off screen for a little bit.
All right.
Let's bring Julie back on. Let's bring Julie on. Hey, Julie, how are you?
Good. How are you tonight?
I'm doing great. Let's talk. Let's talk about this. Delicia and I both have first-time home buyers who need help with their mortgages. They need help with, hold on a second. Hey, hon, can you close the doors here? I don't have a production assistant, so I need thank you. That was architect Jeff, everybody. Follow him on Instagram. So we both have, as agents, people who need a lot of help. First of all, there's a steep learning curve.
Absolutely.
Quite a bit of misunderstanding. So let's just even talk about terms, loan versus mortgage. Some people think they're different.
So one of the first things that I do when I start working with a borrower, whether they're a first-time home buyer or they've, bought a home, but maybe they haven't bought a home in 15 years and the process is a little bit different. Everything's very electronic anymore. So one of the first things that I do is really talk through what the process looks like and from beginning to end. And one of the things, especially with new home buyers that I go through, are closing costs. A lot of people are under the misconception that they need to save up 20% or they can't get into a home. And so we talk about what closing costs are and what down payments are required for different programs. And so, depending on the program that you qualify for, you can do as little as 3% down on a conventional loan. A lot of people think that in order to get a conventional loan, they have to do 20%. But on an income-based criteria, you can actually do a conventional loan at 3%. If you qualify for an FHA loan, it's 3.5%. Mm-hmm. So the barriers to owning a home aren't necessarily as steep as you might think when you think about that 20% number. And then the other thing we do is go through the closing costs, because you are not just bringing that down payment to closing. You have other fees and things that are associated with it. So we kind of talk through what all of those are and why they're important. A lot of people don't understand what the title company does and what title insurance is. So understanding how that protects you down the road is really, really important.
Right. So let me just stop you there. Make sure I introduce myself. This is Stacy from Stacy Sells Philly, guys. You guys know how to reach me all over the internet at Stacy Sells Philly. Oh, that's Julie. This is me. Here I go. There I am at the bottom. And this is Julie Simmons. She is a mortgage broker, and she can help you with all of your mortgage needs, whether you're looking for a new home, a second home, or refinancing either of those above. This is her contact information. Please write it down. If you know someone who's interested in buying, and needs a loan for a home, please give her a call and become pre-qualified. So, Julie, one of the things I say all of the time in my videos is you need 3 things to qualify for a mortgage. You need income, you need some money in the bank, and you need a decent credit score. Recently, like last week, I told this to someone over the phone and they said, well, I don't think my credit is good. And I said, okay, well, what is your credit? And she said 750. And I said, I don't know who told you that, but that's incorrect. We know that those numbers have changed over time, but 750 will, with all the other factors, should be able to get you in the door for a mortgage loan. But
anything over 740 is pretty much treated exactly the same. So, you know, and the truth of the matter is that if you have bad credit, but you have enough extra cash for the transaction, you could always pay points to make that rate a little bit better.
All right, guys, did you hear that? So Julie is saying that
just because you have bad credit doesn't mean that you cannot buy a home, or doesn't mean that you won't get a good rate.
That's right. So you need to call Julie if you want to know what that possibility is. Stop sitting there at home wondering what it is you're supposed to be doing, wondering if it's good, wondering if it's bad, feeling bad for yourself. In a bad situation, a rental or in a home you don't like, it's too small for you and your family. Your family's outgrown it. Stop stopping yourself at the door and call Julie to see if you qualify.
And
so Julie, one of the things
about what makes the most sense for you, and if you're not ready now, what you need to be doing to get ready in 6 months or a year or whatever it is, so that when it's time, you're ready to go.
All right, I'm going to bring Delicia back on because I want to hear from her what she hears from her clients about mortgages, whether they can get them or not. Here, hi, dear. So I was just saying I had a client who said she didn't have good credit. She had like 750 or something like that. And she thought that was bad.
Oh,
so, right. If only, right? So
what was her?
Right. Do you hear some of these strange stories from the people you deal with? I mean, do they tell you things that you're like, how did you hear that? Where did you hear that?
Yeah, absolutely. Absolutely. And then a lot of times I hear the opposite too, you know, so I have someone who comes with a 570 credit score and, you know, they're like, oh, well, I'm ready to buy a house. and Julie just said, hey, if you have the cash, you could possibly still buy a house. But if you come with no cash and you have a 570 credit score, you have some work to do.
There we go. All right. All right. So,
and the thing that I would point out about credit scores, just for everybody's education, and I think it's really important, is a lot of people know their credit score because they look on Credit Karma or their bank or someplace like that. Know that those scores are not accurate for the mortgage industry. They are a general credit score. And if you were to go get a car lease, the auto industry has their own way of weighting things and how they calculate your credit score. The mortgage industry does too. And they tend to be a little bit stricter than the general credit score and the auto industry. So just if you're seeing a 570, it could be a 550. And if you're, you know, seeing an 800, it could be a 750. So it just, you know, don't be surprised if there's some fluctuation and don't be discouraged by that.
Yeah.
Okay, good. All right. And then I would say this. I like to say these things. If you are in doubt, ask a professional. So you have Julie's number, call her. When in doubt, ask a professional. And I think you're absolutely right. Credit Karma is easy to use. It's pretty accessible to most people. But as Julie says, it does not give you the mortgage industry numbers that you need. So call a professional. All right. So we were asking Julie to tell us what are the basics of about getting a mortgage. What do we need, Julie? What does one need?
Stacey touched on a number of things about, you know, the income and your credit score and things like that. But in the end, the thing that the lender doesn't care about is the purchase price of your home. They don't care if you buy $100,000 home or $1 million home. The thing that they care about is how that monthly payment is going to impact your overall debts that you carry compared to your income. And the ratio that they calculate to do that is called your debt to income ratio. So it's all the money that's paid out on a monthly basis, plus the new house payment divided by your income. And each program has a maximum debt to income ratio that you have. So the most important thing is just that you're aware of your debts, you're aware of what money is coming in and out. And it's a really easy calculation that you can do on your own because you know your car payment is this, your credit card payment is that, and your student loan is this, if you have an existing mortgage or whatever it is, it's not all of your housing expenses. So it's not going to be, unless you self-report, going to be your cell phone bill or your cable bill or anything like that. It's just going to be the stuff that's on your credit report that they're going to look at. And
all right. So Julie, let me stop you and ask you a question. Let's do the math so people don't have to go online and look for it. So let's do an example. So if you have a $300 car note, so
Yep.
this does not include your food and your
nothing
water.
like that. So you have a $300 car payment. And then do you want to do the student loan piece of it now? Okay, so what the biggest change that's come in the last couple of weeks with student loans is a lot of people with COVID are in deferment on their student loans. And so what that means is they're not presently paying them. So when I run your credit report and I see you owe $20,000 on your student loan, there's a zero payment associated with that debt. However, they don't allow me to just put a zero payment because eventually that could come due a month from now or a year from now. And so they need to make sure that your debt to income ratio is going to stay in line. So what happens is I have to put a payment in. And previously what I've had to put in is 1%. And so if you have $20,000, I'm putting in $200 a month for your payment. The good news is that they just changed that. They're trying to make it more affordable for people who have student loan debt to get into housing, and they've changed it from 1% to 50.5%, so 50 basis points. So it's been cut in half, which is amazing because it allows your debt to income ratio to significantly free up, because it used to be you had a $200 a month payment, and now it's down to $100.
Okay. It's down to 50%. It's down to $100. It's 50%.
Yep.
All right. So let's do the math for someone.
Okay.
So
go ahead.
I want to ask a question that kind of goes further. So if you are in deferment right now and you're paying zero, do you suggest that people go ahead and start making payments? Because now if instead of that 0.5%, if their payments are $25 or $50 a month, you'll take that $50, you'll take that payment instead of the
Absolutely. If you have an income-based payment or some kind of payment that's going to be lower than that 50%. And one of the things that I ask people when we go through this process is, before COVID, were you in deferment? And if they say, no, I was not, I was making payments, I will ask them what their payment plan was before that. So we do actually go through that. And if the number is lower, then we will absolutely 100% use that, because I've had people who have been doctors and lawyers who have one loan that's $175,000 that's in deferment right now. And that's a very scary monthly payment. However, all of their loans combined were, say, $800 a month when they were on their payment plan, versus just that one loan would have been $1,750 for just that one loan. So yeah, we do absolutely go through that when I meet with people. That's a great question, though.
That was a great question.
I just wanted to make sure I was telling my people the right thing, because I'm saying, if you're in deferment, hey, go ahead and try and get on a payment plan that's less than that 0.5%, so that it'll bring down your debt to income. So
absolutely.
Okay.
All right. So can we talk about the debt to income, and then we'll do some math here so people can hear an example of how to calculate it themselves. So the debt to income ratio needs to be what?
So for FHA, we like to see it below 53, but, and that's a big but, and it's the same with conventional, because for conventional, we like to see it below 50. It depends on your credit score. The higher the credit score, we can get you closer to that 50 and 53. The lower the credit score, it's going to be less.
Okay.
Fannie Mae actually redid the guidelines back in March. And when they redid their guidelines back in March, people that used to be able to have more flexibility on their debt to income ratio on the conventional side no longer are able to do that. So some people, your credit score is a little bit lower and we're going conventional. Sometimes I have to have you below 45.
Okay.
That makes a huge difference.
And you will let them know.
Absolutely.
You will let somebody know.
I do all of that. All you have to do is complete your application, send me in your docs, and then we will go through everything. You will learn more about mortgages than you ever wanted to know, because I want you to understand the process and what's happening.
All right.
Really important.
All right, let's do some math. So we have a $300 car payment.
Yep. We'll put
We have,
$100 in for the student loan.
so what are we putting in for the student loan?
We'll put $100 in for that student loan.
$100 for the student loan and credit cards of $250.
Sure.
Right. So we're at $650. And the income of that person is, let's say,
$3,000 a month.
there you go. You got it. $3,000 a month. How do I calculate my debt to income ratio?
You just divide your debt by income.
There you go. So you guys heard that. So you're going to take all of those reported debts on your credit report and you're going to divide it by your monthly income. Julie, is that your gross or your net?
So that is your gross before tax number. So if you have medical insurance that you pay for and 401ks that you contribute to, it's all before that.
Okay. All right. So in our, go ahead.
Can I ask a question about credit cards?
Absolutely.
Are you looking at the minimum payment on
Yes,
the credit card?
that is what comes through. So
Okay.
it's how the credit bureau reports. They will report if you have any kind of a balance and then what the minimum payments do. There are workarounds if, like, for example, one of my biggest pet peeves is American Express because they require you to pay off your bill every month.
Right.
So if you have a $2,000 American Express bill for 1 month, who knows why, but you have a $2,000 credit card bill, it actually puts in there and it doesn't adjust it for the amount of months. It actually says you have a $2,000 payment every single month. And so
Right.
it totally messes it up. So I'm very aware of those things and I make sure that I adjust them and tweak them. And, but yeah, what it will show is the minimum monthly payment that's required.
Okay, awesome. Are there any other payment types that we should mention that may have some flexibility?
No, not that have flexibility. However, we run everything and we look at the number and then I see what it is. And then I talk about, are there debts? If you're too high, are there debts that you can pay off? Is there something that we can do to get a payment down? Sometimes there's workarounds for those things and it's very, very specific to, each instance.
Okay. But what we want to say overall, and we've said it already, is that the best thing to do is to call a professional like Julie Simmons and get her to run the numbers for you. Even if you think you're a little early in the process, talk to her because maybe there's some other things that you need to do, right, Delicia? Some work that you need to do, and that needs to be told to you so that you can work on those and get your dream home.
And one of the other things that I would mention is, once you're done this pre-qualification process, you're going to start shopping for a house and Stacy or Delicia is going to send you properties to look at. And you're going to say, yes, I want to see this house, or no, I don't want to see this house. You can look at 10 houses that are priced exactly the same and they will come in probably very close on a monthly basis to each other. But 9 of those 10 houses will be the same. And that 10th house, one that you fall in love with when you go to see it, is going to be the one that has a different tax structure than what you've been used to seeing. And all of a sudden, that monthly number is not going to look how you expected it to look. And you may not be able, if your ratios are very tight, to afford that house. So I think it's really important from an education standpoint to reach out to the person that you're working with on the lending side and have them run numbers before you get emotional about a house, before you see it. Make sure that the monthly number is going to work for you because maybe you were looking at single family homes and now you're looking at a townhouse or a condo, and all of a sudden rates for condos are higher than rates on a single family property. And so maybe the rate's a little bit different. Maybe the HOA fee is significantly higher and it throws off your debt to income ratio. And so it's really important, if your ratios are tight, not only to worry about those payments on a monthly basis, but what your mortgage is going to look like, because there are different things that can influence and change your monthly payment every month.
Okay. So do some of your loans or do all of your loans require a home buying class or certificate?
No, that's really something that's very individual to the borrower, whether or not it's required based on the program that they're going into. So I had talked before about if you went into a conventional program that only required 3% down instead of the usual 5%, that program will require doing a certificate program for education.
Okay, great. All right. What about down payment assistance programs for first-time home buyers or non-first-time home buyers?
So the thing that people should be aware of with down payment assistance programs is that nothing's free in this world, and that if somebody's giving you something, then they want something in return.
Mhm.
And it may not seem obvious as to what it is, but there's always a catch, because there's not a magical pot of money sitting out there waiting for you to buy a house. And so the thing that you need to be aware of is just the rate that you're going to get for those programs, because they're typically higher because they're providing you something. People with, that have very good credit and money to put down and have low, that 20% down, pay less in rates. They have a lower rate because they're less of a risk. And the way that the lenders look at it is the risk is, directly tied to the rate. And so if you're not even putting your down payment down, now you're a higher risk, and they're going to charge you a higher rate as a result of that. Now, there's two different types of programs where they charge you a higher rate. There's a rate that is a much more reasonable to the market rate. So if you were to qualify for, say, a 3% loan, this rate's probably going to be low to mid fours. And so it's not quite as high as other programs, but they typically lock you in for about 5 years on that program.
Okay.
And they make you stay in that loan, and you have to keep paying it back. Why? Because they're making so much extra money on that interest, that on the money that they gave you for the down payment. I actually don't have those loans. The loan that I have is a little bit different. The way that it works is they charge you a much higher rate. So whereas rates are at 3, that initial program I talked about was mid fours, low fours. My program is actually 6.25. It's significantly higher. However, it is a forgivable loan, and after you make 6 payments, you can refi out of it, and it's gone.
Oh, wow.
And so you have to kind of just bite the bullet on those first 6 payments. But then once you're through those 6 payments, you can refinance out of it into a much lower rate, and it's done. So you're not locked into, a higher rate for 5 years. You're locked into a much higher rate, but only for 6 months, and then it's gone.
Okay. So some flexibility with down payment assistance programs.
Yep.
And for those who need them, again, we're going to call the professional. We're going to call Julie, and Julie's going to help you out. Well, ladies, we've been on for about 27 minutes. I want to just make sure I reintroduce everyone. This is Stacy from Stacy Sells Philly, and Julie Simmons and Delicia Inge from Delaware. She is I thank you. I said her name correctly.
Great job.
Yay me. And she is our preferred referral for Delaware and for Cecil County, Maryland. So if you want to live in any of those areas, plus I'm here and soon to be licensed in New Jersey. So we were going to be able to cover 4 states between the two.
And I'm licensed in all 4 of those states.
Awesome. Julie is licensed. And so we're happy to hear that. So guys, again, if you have any questions about these topics, please comment. If it's after the broadcast, then I'll make sure that Julie gets it. If you're interested in buying a home in Delaware or in Cecil County, Maryland, let me know, and I will refer you to Delicia. All right, guys. So how about this? Delicia, you have any parting words for folks who are looking for houses and need a little help? Mortgage, down payment assistance, education. Do you have any comments?
Just reach out to a professional, as Stacy has been saying the entire time. You can Google and you can read and you can listen to your friends and you can listen, but at the end of the day, make sure you're talking to someone who's living it every day and who knows and understands this market and can get you into a house the right way, in the best way. And I can't stress that enough. The whole for sale by owners, all of that, just seek a professional. It doesn't even have to be me. I just want you to seek a professional.
Right.
Ensure you're getting the right answers.
Exactly. So we have one comment during broadcast. It's from Dwayne Kusar. And he says he's going to be looking in Cookiesville, Maryland in about 6 months. Is that in Cecil County?
I have not heard of Cookiesville, but I can look it up and definitely get back to you.
Okay, all right. Thanks for the comment, Dwayne. I hope you're okay. Sorry for the loss of your sister. I heard about it from Mom.
Oh,
Tell
sorry.
Mrs. Kusar hello and that we love her. All right. Yes. Talk to all my friends online while we're live. Okay. Julie, we're done. Do you have any other comments to send our viewers tonight?
I think the most important thing that I would want to leave everybody with is just educate yourself and spend as much time and make sure that the person that's representing you, and obviously Delicia and Stacy will be happy to do this, but no matter who you choose for your realtor or your mortgage professional, make sure that you feel they're representing you and spending the time to help you walk you through the transaction. We do this every day, and I always tell people, like, sometimes I may go too fast. Just I do this every day, and sometimes I take for granted that you have a different level of knowledge. Just slow me down, because my job is to make this smooth and easy for you. And there's two reasons that people are buying a house or selling a house. Something good happened to them, or something bad happened to them. So if something good happened, they got a new job, they had a baby, they got married. Something bad happened to them, they got divorced, somebody died. My job is not to interject any stress, because I'm either adding stress to somebody that doesn't need it, or I'm taking away from somebody's excitement and their happiness. And so make sure that the person that's representing you is spending the time with you so that you can either enjoy your transaction or not add stress to it, because that's what our job is to do.
Well, I appreciate your time tonight, ladies. I really do. Thank you so much. I'm going to say goodbye to everyone, and I'll talk to you ladies soon. Thank you.
All right. Bye, everyone. Thanks for coming tonight.
All right, guys, you heard it from a professional, and I've said it before and I'll say it again. Ask a professional what you want to know. Don't go hanging out at the ballpark and ask questions about mortgages. Ask a professional. Julie's information is right there. Write it down, rewind the video, look at it again, call her, ask her as many questions as you'd like. Ask me as many questions as you'd like. If you are interested in buying a home in Delaware or in Cecil County, Maryland, I can refer you to Delicia. All right, guys, I hope you enjoyed this little educational moment. And again, if you see a house you'd like to buy, or you know someone who'd like to sell a house, or you'd like to sell a house, give me a call. All right. And where's my information? Oh my gosh. I need an assistant so bad. Here we go. There I am. 484-393-5842. This is Stacy Middleton from Stacy Sells Philly, and I work for Berkshire Hathaway. All right, guys, have a great night.